Hey, what's going on everyone? Sal here with another video, and today I want to talk about IYT and how the next bounce could be your greatest shorting opportunity ever, or a confirmation that we could possibly bounce to all the way back to all-time highs. Now, I'm using the IYT ETF to prove that. Why? Because IYT really contains the foundation of America's infrastructure. You get exposure to trucking, you get exposure to the railroads, you get exposure to the airlines. These are the companies that 100 years ago, they'd be the leading issues on the stock exchanges. But because we're now in a different time where the microchip is quote unquote considered more important than the railroads and the trucking companies and all that, those are more able to be manipulated with higher price to earnings ratios and very clever financing, where these companies can't. So they trade at very low PEs. They still have incredible decent volume because people understand the value of these companies, but they can't be manipulated. Right? They cannot be manipulated because they can't trade at 50 times, 100 times earnings like many of your blue chip microtech companies, microchip companies can. All right. So when we talk about a recession, when we talk about a declining revenue situation that the coronavirus is placing on us, these are the companies that are going to feel it first. And if we were to turn around or that situation wasn't going to happen, these are the companies that will benefit first. So let's look at IYT, right? And a bounce, if we go on the shorter time frames, all right, we're starting to see those higher lows, right, develop on the RSI, right, which is basically just a confirmation as we scroll through higher and higher in the time frames that the selling pressure is subsiding. Right? That is the case. The selling pressure is indeed subsiding. But I want to go back to the future to kind of tell you why this doesn't necessarily mean that it's time to bet the ranch that we're going all the way back to all-time highs. All right? So is the selling pressure subsiding? That's our first question. Yes, it is. And to confirm that, we're going to add in one more indicator. All right. We're going to add in the momentum indicator. Now, this is not, one that you're going to necessarily trade with. This is a confirmation indicator. Right. And you always use it on a histogram. And we're going to darken that up so we can see it a little bit better. Let's use a lighter color. All right. So we can see it in the price action. All right. And as you can see here is the strength of the move down. Right. And we are basically at, on the daily time frame at its lowest point, or highest point rather. But if we go down to some of the smaller time frames like 4 hour, right, we can see it's weakening. All right. It's clearly showing some weakness here. All right. So yes, there could be a possible bounce that's clearly developing here. Here's kind of strengthening up again. But as you can see here, when we move up to those higher times, it's coming. It's coming. So the move is getting lower. Now, why does this mean that we're not out of the clear yet? Let's go back to 2008. I want to go back to 2008, and I want to show you something. So when we go to 2008, and we're at September of 2008, notice that we eventually did lose almost 70% of value from the IYT. This was basically the market crash of '08. All right. Happened from September to about March of '09. And then we had the bailouts and things got a lot better from there. But there was a lot of money lost here. And this wasn't a straight down decline. As you can see here, there was moments where it looked like there was going to be a relief rally. And as you can see here, right, we got to, this is the daily chart again. We got to the lowest point, right? I can't go all the way down. We got to the lowest point. And as you see, the selling does eventually, pressure does subside. And we get a false rally, right? A false rally, dead cat bounce that basically fails at the 60 RSI. Notice that here. This is what we're going to look for in the future. In the next couple days or weeks ahead, What I want you to focus on is a failed 60 RSI attempt. These two were some of your best shorting opportunities in 2008. And I believe they're going to be the best shorting opportunities in this coronavirus situation. Now let's move again back into the future. As you can see here, that second one, whoo, that was like a 50% move right here. 65 at the time. All right. Again, this could be split adjusted. I don't know. But from 65 to 37. All right. 37, 38. So well, almost 50%. All right. So let's go into the future. All right. So here we are. Back now to the lowest point. What we're going to be looking for is a 60 RSI attempt. And we're going to be looking for a failure of the 60 RSI. That is what I want you to focus on in the next several days and weeks ahead. If IYT does bounce, does it break through the 60 RSI to a higher RSI level, breakthrough, to showing that, hey, this is a different scenario. Things are different. Or does it fail and confirm the bearish move? And that is going to be your shorting opportunity. There's going to be so much money, as I've already showed you, to be made if you catch that 60 RSI fail. It's your boy Sal. Pay attention. Go in, guys. There's a lot of money to be made on this decline. There's still so much meat on this bone. So much meat left on this bone. All right. A lot of meat left on this bone, folks. There's a lot of money to be made on IYT among many other ETFs out there. But go back in history, see how that one reacted. But IYT is going to be where you're going to want to look for confirmation on the downside move of the market. All right. It's your boy Sal. Until next time, take care.